let's take a look at basic financial statements. So we're going to look at the four basic financial statements. The balance sheet, also known as the statement of financial position. We've got the income statement. You may also hear it called a P&L or profit and loss statement. We've got the statement of cash flows, and we've got the statement of retained earnings. You may hear it as a statement of owner's equity. Take a look at the balance sheet or the statement of financial position. It contains the assets, liabilities, and you've got equity. So it actually mirrors the accounting equation, which is assets equals liabilities plus equity. Assets equals liabilities plus equity. So the balance sheet, it mirrors the accounting equation. Now, when we look at the income statement, it's got a summary of the revenues and expenses. So you've got the revenues that are coming in, you've got the expenses going out. When the revenues are greater than the expenses, we'll have net income. So when we have the expenses that are greater than the revenues, we've got a net loss. And when they're equal, when they balance each other out, then we've got a break even, right? We've got a break even, we got a zero. So we don't have a gain, we don't have a loss, we don't have net income, we don't have net loss, we've got a break even. But key point, income statement, you have revenues and expense. Now let's look at the statement of cash flows. When we're looking at the statement of cash flows, it gives us at the very end the net change in cash. So this is summed up by analyzing the cash flows from operating activities. We get the cash flows from investing activities. We've got the cash flows from financing activities. Put a disclaimer, doing business in the U.S., because if it was a company that was international, we would look at any losses from currency exchange. But a domestic U.S.-based company, we're looking at cash flows from operating activities, cash flows from investing activities, cash flows from financing activities. That gives us a net change in cash. Now, statement of retained earnings is also statement of owner's equity. To create this statement, which is required by generally accepted accounting principles or GAAP, we have net income. So we need information from the income statement to produce this. Also, this provides information to the balance sheet. What I mean by that is the statement of retained earnings are a part of the balance sheet. So it gives information to the balance sheet, and then we receive information in order to create the statement from our income statement, because that's where we would find our net income for the period. So this is an overview of basic financial statements that we touch on in our course in Chapter 2. Thank you.